Welcome back to Next Gen Investing. It's time for FOMO. So joining me to discuss Nvidia, of course, because what else right now is really moving these markets is I'd like to welcome in Caroline Wood, Senior Markets Correspondent for the network. So Caroline, another day, another Nvidia story, some analyst optimism. But I mean, at this point, it's just like the momentum trade, it feels like of the last decade, because we just keep watching Nvidia and it dictates, it feels like, the overall market. Now, giving up some of its strength in real time here, but still up 1% obviously on the session.
Yeah, it was up more than 3.5% earlier in today's session, but yes, has given up some of that strength, now only up about 1%. But yes, another day, another Nvidia price target hike. This one coming from KeyBank. The analyst there raised its price target to $180 a share on Nvidia from $130, kept an overweight rating on the shares. It's one of the highest price targets that I've seen on the street. Rosenblatt is at 200, but 180 implies almost 40% upside from current levels. The KeyBank analyst has a few positive takeaways for Nvidia. It says despite the impending launch of the Blackwell chips in the second half of 2024, they're not seeing any signs of a demand pause ahead of that, as demand for the H100 remains robust. They continue to see rush orders. Also, the interest and demand in the GB200, which is the highest end server model of its new Blackwell product line, is greater than they had initially sized, and this analyst says it could support over $200 billion in data center revenue in 2025. So definitely optimistic on Nvidia and, notching that price target higher. I will say this KeyBank analyst also raised his price target for Micron and Monolithic Power Systems, MPWR. They think that he thinks that they'll be immediate beneficiaries of this demand for Nvidia chips. So raise the price targets for both Micron to 165 and Monolithic Power Systems to 975. So and actually still bullish on AMD as well, although trimmed the price target there to $220 a share from $230. So still 25% upside, but trimming the price target there. But Nvidia up about 1.2% right now, up about 5% already in July, and up over 160% year to date.
The well-established CEO of Ark Invest, Cathie Wood, has openly regretted in a deleted post an action she had taken quite a while ago regarding Nvidia. This action had cost her company millions of US dollars, and she still learns from it up to this day. So, what was this about exactly? That's what we will go through in today's video. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Caroline, we talked in the last segment about Amelius research analysts that started to like some of these second wave AI players, as they talked about. Is that becoming more of a feeling that you're hearing on Wall Street, or is that still pretty contrarian?
No, that research report from Amelius earlier this week is really, one of the only times that I've heard. I mean, his whole point was just kind of the AI catch-up play, right? So, maybe focusing on some other names, not necessarily that Nvidia is poised for a big downfall. I mean, I will say that New Street did downgrade Nvidia to neutral from buy with a one-year price target of $135. That was last week, thinking that basically shares are fully valued at these levels. I mean, the $135 implies about $5 upside from here, saying the quality of the franchise is nevertheless intact, but they would only buy on prolonged weakness, or if the outlook beyond 2025 increases considerably, it gets even more bullish. So New Street does prefer an AMD or a TSMC instead of Nvidia, but you take a look at the breakdown, 91% of analysts still have a buy rating on Nvidia. The median price target is 135, but it's hard to even look at that median price target because Nvidia is one that we keep seeing the price target increase as Nvidia continues its run higher. We saw Wolf Research and UBS just notch it to 150. So, the analysts continue to make changes on this one. UBS, there was an analyst there that did say that there's this wall of worry for Nvidia, but also pointed to the strength in Blackwell in terms of that exceedingly robust demand, in his words, as why he thinks that Nvidia can climb that wall of worry and continue to move higher.
In a now-deleted post on X, Cathie Wood has openly expressed her remorse over selling Nvidia shares before its dramatic rise. Wood said that had they known that the market was going to reward Nvidia and the other 6 magnificent stocks that will be the prime beneficiaries of artificial intelligence like Tesla, who she calls the largest AI project on Earth, they would have held it. In 2022, Cathie Wood, the well-known portfolio manager of Ark Invest, confidently predicted that her Ark Innovation ETF would grow by 50% annually over the next 5 years. However, by 2024, Ark has dropped about 5% this year, falling short of her bold prediction. The main reason for this shortfall is the absence of Nvidia in the fund's holdings, which has led to a phenomenal drag on the ETF's recent performance. After all, Nvidia shares are currently up 168% so far this year. Cathie Wood is of course very well known for her exceptional investment strategy, where she sells high-performing stocks to buy underperforming ones. However, this strategy wouldn't really go well in the current market, which has few strong-performing stocks. But this time, she miscalculated the whole situation severely, because by selling Nvidia too early and not letting her winning stocks continue to grow, missing out on significant gains for her main ETF. While making an investment decision when it comes to Nvidia stock seems easy enough now, thanks to the company's exceptional growth, Wood weirdly couldn't foresee Nvidia's dominance approaching, and her expectations turned out to be disastrous. In fact, Wood's funds sold at least $4.5 million worth of Nvidia shares this year, losing out on billions of dollars. Eventually, Nvidia's stock price has more than outperformed Wood's bearish prediction. The chip giant's stock has gone up by 172% this year, and it briefly became the world's most valuable company last month. So, did Cathie Wood learn from her mistake? And what should investors do regarding their Nvidia shares? Let's go through this. Hello, everyone, and welcome back to Investocracy.
Yeah, and I think that that's a substantial argument to be made right now, because I do think that when you have a name that's run up to this extent, it's all of our fears, really. It's like standing in front of this like moving freight train, it feels like, to try to be against the Nvidia momentum. But also, I guess the bullish thesis, and I'm sure you see this continually, is the fact that maybe this name isn't actually overvalued at this point. I mean, it trades at a multiple that is actually cheaper than like an AMD, which to me is just frankly amazing when you look at some of the like winners and losers in this space, that it still trades at 43 times. I know that's gone up, I mean, like almost double over the last several years, but it's actually still relatively affordable.
Yeah, and I think the big question for an Nvidia is looking further out how much of that was a pull forward in terms of, what's next once, maybe some of the competitors catch up, or, once there's not as much chip demand for an Nvidia, but it seems like that's not really on the radar right now. Going back to what Alex had to say, too, I think that, there was the Citi note I was reading about in a Bloomberg article. A Citi analyst was saying, or a group of analysts said, we continue to suggest investors take profits in AI high flyers, in particular the chip makers. Didn't necessarily call out Nvidia, but said investors should rebalance toward a broader array of AI stocks across the value chain. Our estimates suggest stock prices imply lofty expectations, but long-run consensus estimates suggest most are attainable. So essentially, sentiment is very optimistic, but still shy of a full-blown bubble. That being said, they have a buy rating on Nvidia and a $150 price target, so $20 higher than where it's currently trading right now. So maybe that plays into that Melius research theme a little bit, but for the most part, it's still a lot of bulls on the street.
In a recent interview with the Wall Street Journal, Wood said that she does acknowledge that Nvidia has a crucially leading role in the current thriving industry of artificial intelligence. She also added that Nvidia's stock has recently become a check-the-box stock, meaning that it's essential for investors nowadays to own Nvidia stock. Yet, Wood still believes that the stock is very cyclical, meaning that it is experiencing intense buying then inventory corrections. On top of this, she stated that the stock is experiencing an incredible hype, driven by excessive ordering, which will eventually lead to corrections, especially when the inventories are very high. Wood believes that this pattern will happen again, where the current excitement will lead to an overstock and then a market correction for Nvidia. So, she does agree that Nvidia is a leader in the current AI revolution, But on the other hand, she believes that its stock is vulnerable in front of overbuying and correction cycles. All of these statements sparked huge criticism of Wood's determination on underestimating Nvidia stock. Some analysts even called her out, saying that making a mistake is one thing, and being keen on not learning from it is another. Wood is clearly committing a mistake once again. Many Wall Street firms have even increased their price targets on the tech giant, reflecting very strong confidence in its future, believing that Nvidia has not fulfilled its potential yet and that it still has milestones to achieve. Owing to this, dismantling Wood's bearish predictions, Nvidia has decided to increase its orders with TSMC by an incredible 25%, and the company is expected to deliver around 60,000 units of its GB200 NVL72 and GB200 NVL36 servers, priced at $3 million and $1.8 million per unit respectively. So, does this make Nvidia stock a good buy at the moment? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
For NVIDIA.
Yeah, and I was also reading that highlighted basically like the underperformance of some of these names we've seen. We could see the laggards now start to outperform, but so far, again, betting against Nvidia hasn't worked. Is it the underperformers? I would say still continue to lag Nvidia. So it's why it's a great FOMO candidate as always. But appreciate the breakdown. Appreciate it as always, Caroline Wood, senior markets correspondent for the network.
As we can all tell, Nvidia's supply chain has improved significantly over the past 2 quarters. This happened as a result of a group of factors, as Nvidia has formed strategic partnerships with many partners to expand the supply chain of its GPUs. This includes collaborations with semiconductor manufacturers, foundries, and other key players in the tech industry other than TSMC, such as Micron Technology, Foxconn, Samsung Foundry, and ASML. In addition, significantly enhancing the production facilities, as Nvidia has pushed the manufacturers to expand and improve their means of production, and this involved investing in newer technologies. But now this essential upgrade to their supply chain will help the company's rapid growth a lot. Therefore, Nvidia is about to witness a new chapter of mere glory, bearing in mind that the only obstacle that was keeping Nvidia from achieving even larger profit and revenue was meeting up with the colossal demand. And by maintaining a robust and efficient supply chain, Nvidia earns a competitive edge in the battle of GPUs, which is vital as other companies also vie for dominance in the AI and high-performance computing sectors. With all of these givens, investing in Nvidia stock is definitely a great decision. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.